Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, well, we talked about back on Tuesday, down at the 21 area, it was a potential higher low and a retest of the 100-day exponential moving average. Two trips down there. You can see the first one here, 1575. The second one here at 21. All the bears have done since then is give up every piece of ground there was to give up. They've given up weekly pivot that needed to hold. They've created higher lows. We have now moved solidly through the 51 to 55 resistance area. That's now converted. We've traded as high as 65 in the overnight. And the bulls continue to build pressure into today. The jobs report is tomorrow. They continue to climb this ladder, the destination of which has got to be for them new all-time highs. Anything less is going to, generate what has been two-sided interest in the market. This is not your 2013 market. This is not your 2014 market. This market has pullbacks. Those pullbacks need to be respected, and you can be short those pullbacks. But until the bears really demonstrate an ability to get through longer-term moving averages, the 100, the 200, to build those lower lows, to sustain and contain, I think contain is a better word, to contain a bear market rally, which is exactly what this is here. But it has to be contained. It has to be pushed back upon. You can't do 15 to 50 and 21 to 65. That emboldens dip buyers who have every reason to be emboldened, and you end up giving the mid-band back. So as hard as they fought to keep it, back around the middle of the month, they've now done one test, two tests. This is the 100-day. And on the second time up, it's through. So there's your 88.5 all-time high. You've got to look at now, the struggle in this moment was at 74, 73.25. So if we continued movement towards the upside, you've got to look at 73, 74 as the next area of significant resistance. What do the bears want to do? Well, the bears want to get back below middle band. That's nice, but that's 10 handles away, and they haven't been able to demonstrate being able to do anything better in the overnight than 57. If 57 is created in the overnight, then the bears will have to avoid the trap that they fell into yesterday. Yesterday's launch pad was created by doing matching lows. You can see it on a 5-minute chart. Matching lows at 42.75. Bears fell right into that trap. They allowed matching lows. That alerted us in the room that the bears were, we were going to have some trouble. And when they converted the proprietary moving average 5-minute mid-band, the 46.48 area, I had to get out of a short for about a handle. I had to get long, and, the long ran for about 10. This overnight move has been pretty strong. It's been pushed back upon pretty strong. Just in the very short term, take a look at a 5-minute chart. You see the proprietary moving average here was resistance. Messing around with 58s. Back to it. We would need to contain price. That's asking a lot into the open. So if it can, and it can produce a lower low, then it can head back towards the Globex lows in the area of 55 to 57. But what I was saying before, here's where it all started. 42.75 and 42.75. That was our first sign yesterday of trouble. We talked about it about 9:35 in the room. The next sign of trouble was when they took it up, they pulled it back, and it holds here, launches through here, and then every move back to the 5-minute mid-band was support. I laid that out in the midday update yesterday. You can see where we got a little bit of profit taking late in the day, but as the Globex wore on, you could see just basically sustained support there at 57, and then they ramped it. So coming back to 57, revisiting this low, 56.75 in off the open or in and around the open. If they create more matching lows, then what you've got is the potential for more trouble. So it's tempting to be short. We're short right now against this area, but we're not going to hold it if there's anything, if there's any trouble at all above that proprietary moving average, we'll be quick to get out. You can be short and you can try things, but what you can't do in this market is be a stubborn short, because you will get drilled. All right, everybody have a great morning. I will catch everybody for the midday update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.